In the 2022 investment opportunities video, I asked you guys if you wanted me to dive deeper into the opportunity that I'm seeing with Dreamfinder Homes stock using a stock option strategy referred to as selling a cash secured put. And you guys can thank Mike T for this video as he linked to this section in the video and really wanted the deep dive into this. And that's what we're going to dive into in this video. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up, guys? And I'm not going to waste any of your time. Let's dive right into it. Dreamfinder Homes is a small spec builder that is focused on Florida, Texas, and the Carolinas. And the more astute viewers will note that in terms of how it impacts home builders, these southern states are the ones that are the biggest beneficiaries of migration during COVID, at least from July 2020 to July 2021. And I do believe that this trend will continue as we navigate into this new post-COVID work from home hybrid model economy. I was calling for this last year as I really thought that the model had changed, but I was being ridiculed for it. So it's really interesting that more and more people are now getting on board with the fact that the economy has permanently changed. Even Mark Zuckerberg in the presentation of the metaverse acknowledged that hybrid work from home economy is here to stay. And you can see that Dreamfinder Homes is perfectly positioned for this as the top states for migration are Florida and Texas. So someone's got to supply these homes, and here's where we can generate profits from participating in servicing this demand. And on a side note, if you're wondering where the people are coming from, it's largely from the more populous states being New York and California. Also, I will dive deeper into this in the next video, but with the active number of home listings down to a fraction of where they were a few years ago, and America being short as much as 5 million homes, 2022 is set to be another strong year for home builders in general. And this is a sentiment that the National Association of Home Builders does agree with, even when taking into account declining affordability and the expectation of rising interest rates in 2022. The demand for single-family homes is just very high right now. Now, I do have to play devil's advocate here because we always got to look at both sides, and some may argue that we could be in an asset bubble for homes spurred on by lower interest rates, and I do have to say that I don't have a crystal ball, but they could be right. But I don't see it that way, except for in certain extremely high-priced areas such as San Francisco, Manhattan, and Los Angeles, exactly the places that people are leaving. Also, some would compare this to the 2008 real estate bubble. I would be cautious to compare the current environment to the housing crash of 2008 and 2009 because most buyers now do have significant down payments. But if we have a serious inflation-led shock to the economy and people aren't able to make their mortgage payments, all bets are off on the housing market. So basically what I'm saying is I'm using every piece of information that I can to come up with my perspective, but I obviously can be wrong. And I think with investment analysis, it's important to have that level of humility. Turning back to Dreamfinders Homes, you'll note that I did do a full breakdown of the company, which I will leave a link for in the description below. So go check that out after this one to get a further background of the company. And before I get into the cash secured put opportunity, it is important to review the valuation that I have on the company first, because that's exactly what drives our option analysis. Now, of course, this is not a recommendation to make any actions, nor is it advice. Always talk to your investment advisor, guys. And I'm serious about that. You can see from the valuation that I'm forecasting 2022 EPS at $2.13 per share, which is actually lower than the analyst community at $2.36 per share. And when you slap on a 17.5 times multiple, you'll get a valuation of $35.50 per share. If you want to reduce that multiple a little bit to 15 times earnings, your valuation will come down to $30 per share. I personally like the 17.5 times multiple because it reflects the fact that they are a small builder that is expected to grow a bit faster in the next few years. Now, with our valuation of at least $30 a share, I would not want to pay more than $15 per share for this company, as that gives me a huge margin of safety. Remember, guys, I love playing that arbitrage game, and I love to buy a dollar for 50 cents. The current share price is $19.45 per share, so I can't just outright buy the shares of the security, but what I can do is look at the cash secured put opportunities. Now, here's where things get a bit interesting. When you take a look at the July 15th, 2022 $15 strike price cash secured puts, it looks like you might be able to sell a cash secured put for $3 a share as it falls between that bid and ask price. Note that you may not be able to get this, especially since the last sale was so much lower at $1.35 per share, but for the purposes of this exercise, let's assume that it is a possibility. And it's not like this is outside of the realm of possibility, because it is something that I was able to do with this name in 2021. Now, that $3 per share on the $15 strike price reflects a cash secured put yield of approximately 20% and an annualized yield of approximately 40%. Also, if the share price crashes and I'm exercised on, I do have a downside protection as my net purchase price would only be $12 per share, reflecting something just over 5 times 2022's expected earnings. This is exactly the type of opportunity that I'm on the lookout for and something that I will be interested in pursuing. For the guys who are on the Patreon, I will be talking about this in more detail in the coming months. Also, one other point that I wanted to make on Dreamfinders Homes. You already know that I like spec builders because of the lower level of inventory risk. The one thing that makes Dreamfinder Homes even more interesting and unique is that they employ a land option strategy, which further reduces their inventory risk. They do this by paying a small premium to a landowner in the amount of 10 to 15% for the option to develop that land. If Dreamfinder Homes chooses to not exercise the option to develop the land, it loses the deposit paid for the contract, which gives the landowner a huge win as they get to keep the premium. This strategy will limit Dreamfinder Homes' upside in booms compared to its competitors, but will also significantly reduce the downside risk. And you guys already know that in this environment, I'm almost entirely concerned with downside risk in any investment that I'm making. Obviously, I can't eliminate it, but what I can do is my best to mitigate it. To learn more about the opportunities that I'm seeing in 2022, click right here.